Now, the timing part of this, I have no idea. It says it's preparing. We miss our, host so much, obviously. So we might be live on YouTube. We may not. I think it is coming in here live very shortly. And
I think we are live. Feels like we're live.
give it the old play button. Let's rock and roll. And I don't think you shared system sound there, but that's okay. We will figure this out. I can hear it faintly in the background there, Noah. Okay, and welcome out to our halftime report here on a Tuesday, the last day of the quarter, 3/31/2020. We've got Mark, we've got Noah, we've got Tim, and we are missing Cody and our host here that usually takes us live. We will get this through here, guys. Coaches without the assistant coaches, we just don't get the job done the same way here, Noah. We need our team. There's no doubt about it. Thoughts are with Cody right now. He's out there dealing with, having his first child and whatnot. So definitely our thoughts are with him. Noah, how are you doing here today?
I am fantastic considering the fact that it's a Tuesday, the sun's out, and the market's pretty quiet. Can't complain here.
Is this going to be the first day we have a kind of a boring day in the market? I mean, we've not had a boring day in the market in a long time. We're on a doji for the first time in how long here, guys? I mean, when was the last doji we had on the market, Noah?
Whoa, boy. A month?
It's been a month. I mean, it's been at least a month, and we're in.
Well, you had a violent long-legged doji down there at the bottom, but that's not your typical small doji day. So
that's a doji if the doji was doused with gas and lit on fire. That down there on the bottom, that's definitely not a doji. Doji in Japanese, by the way, from what I understand, means small house. Is that the interpretation Noah? I know you've read the book.
Yeah, I've read the book, and I think it's small house, but it also like the interpretation is like balance, simultaneous push pull. Like there's a balance of forces. So it's indecision. We all understand that.
If anybody does speak Japanese out there, let us know what the strict interpretation of the word doji is. I would love to actually know the difference now. Is it push, pull, balance, or is it small house? Let's talk markets here, guys. We're on a little bit of a boring day, but that's because we're ending the quarter today. There's some interesting news going on. Let's break this down technically if you can first, Noah. Tell me what you're seeing in that chart.
Well, what I am seeing in that chart, let's see, my mouse doesn't seem to want to work. But it's just small body candles up in there. We're seeing the resistance zone come in there at about 2,600 ballpark. Mm-hmm. And it's just hanging out right below that. Like it was thinking about breaking out this morning. It wanted to break out, but it hasn't been able to power through that yet. And it's just kind of hanging out and resting there. So pretty quiet day so far. Uneventful, of course, volumes low in the session so far. And, things could be vastly different by the end of the session. But, at this point in time, all quiet on the Western front.
Mark, big picture here first. What are you seeing in the broad markets before we talk individual stories or news? What are you seeing in these charts right now?
Just stagnation right now on hourly charts. If you pull out an hourly chart of the futures, we're just seeing hesitation. I think right now, and when you think about it from a big picture standpoint, it makes sense, right? It makes sense as bulls and bears. I mean, we've been talking a lot at Tackle Trading with our pro members about bulls and bears. You have a really, really long multi-day consolidation range that has developed over going back to yesterday at 10, 11 o'clock our time. I mean, that's a pretty long consolidation range. One of the longest consolidation range we've seen in this entire market. And so, I mean, you have this like huge battle right now, right, between bull and bear thesis that we've been talking about, and maybe the market for the last 16 hours or so is saying we don't know.
Yeah, it feels like that hesitation, a balance of both parties kind of just coasting through till the end of the day. Is there anything that you guys make out of this end of quarter theory that the markets kind of want to leave it on a high note? We've rallied into the end of the quarter. This is the last day that portfolio managers can actually do something about their books, and then they can rebalance, they can unload. They have certain restrictions they got to obey, Mark, and whatnot until the end of the quarter, I believe. Is there any window dressing here? Do you buy that at all? Let's start with Noah.
Well, I don't know about window dressing as far as like making their portfolio numbers look better. That rally back up certainly doesn't hurt them, for the long holding stuff. But I don't know about the rebalancing. I mean, I certainly can see them doing that. That's a typical thing. I usually kind of expect that on an annual basis, not so much a quarterly basis, but probably the case.
These kind of theories to me, Mark, feel like guessing. I'm starting to read them a lot today and yesterday.
The bulls better hope. So this general theory is that the pensions and these large funds at the end of the quarter have to balance in a certain way, where stocks and bonds are weighted a certain way. Bulls better hope that theory is all crap, because if that theory is true, then that was a reason for a lot of the stock purchasing in the last several trading sessions. And once that rebalancing is done, well, that surge, that short-term surge, yeah, they better hope that is just people speculating.
Yeah, I agree with that. I mean, it's going to be really interesting to go through the rest of the week now that we're beyond that. I've been reading a lot of chatter about that the last 2 days from different sources that actually I follow and whatnot. I don't know how much credence there is to it. I mean, in logic, it does make some sense, but we'll see if that actually comes to fruition here. We're in a tight range on the intraday on the hourly chart, pressing up against resistance. I got that line up there, Noah. A breakout would be nice and clean. If you go back to that daily chart, guys, if you do get carry through here on a breakout, I mean, we're right on the falling 20-day moving average. We would pop above that. We'd pop above a little pivot point. You'd have at least another 100, 150 points until the next resistance. I mean, where would you have that next level, Noah?
As far as next resistance level, well, I've got that drawn up around 2,800 kind of ballpark, which if you zoom back out and you see a little history of context, it's the old support neighborhood back in here. So, there's that support resistance zone. Again, big fat numbers. I think $50 increments, 2650, 2700, 2750, 2800 is where I would watch those key price levels. And then, the big fat numbers like 2800, those are going to be forces to be reckoned with, as is 2600 right now. So, yep, those are the two price points I'm watching. And I actually think we are going to see resistance. I just don't know if it's going to be right here. If we do get that breakout, I think 2,800 would be a pretty quick test. I don't think it'll take a long time to get up there.
There is some clear area in there, Mark. I mean, on all chart timeframes, right? I mean, if you do get above these levels here, I mean, the bull argument gets stronger, doesn't it?
From an algo standpoint, yeah, I mean, price can go up quickly. It can go down quickly in this environment without a doubt. So if there is like that news bump, that story bump, that hope bump, that whatever it is, you could see that price go up really quickly. Doesn't change the overall fundamentals and long-term argument, right? Because this market is freaking just a bunch of freaking gamblers right now trying to guess. So.
Yeah, it feels like that to me. By the way, economic data today on the S&P and on the market here in the U.S., Chicago PMI number came in at 48. The expectation was a drawdown to 40. Now, if you track manufacturing numbers, Mark, anything below 50 is assumed to be contraction. We knew there would be contraction. They thought it was going to be far worse than it was. It came in at 48. But give me FXI here, Noah. And I just got to give you the number they reported, okay? And then we can talk about it for just a minute. The Chinese PMI number is actually what grabbed the market's attention earlier in the morning. It came in at 52, which means expansion. Mark, do you believe manufacturing in China is now expanding?
We can now officially state that everything that comes out of China is total bullshit. Like,
no, tell me how you really feel, Mark.
Like
no, you don't need to hold back with us. Just kind of tell us how you feel.
Like there's always been the, hey, China, how do you trust it? No, literally anything that comes out of China, whether it's coronavirus data, whether it's economic data, is totally 100% manipulated. absolutely laughable. Like literally some of the people I was reading about last night, there's like, oh my goodness, like I needed a good laugh. like I needed a good laugh, and China gave it to me, you know, because it was, I mean, it's totally 100% a lie. But, and this is the thing on the coronavirus, right? Why do bulls point to bettering conditions in China when we know they are manipulating everything, when they're outright lying and outright 100% lying? And yet you point to China and say, well, things are getting better. How do we know? Western journalists aren't there.
No, they kicked them out.
They're not testing. There's reports that you get of people literally not being tested, asymptomatic individuals not being included, but their movie theaters have closed down indefinitely now,
Yeah.
but they're not getting any new cases. China
and
is a joke.
We have satellite imagery about the pollution levels in China, which actually is a direct reflection of manufacturing, and it's the cleanest it's been in like 30 or 40 years. We know they're not actually manufacturing. They're not back to business. There's all kinds of stories about in Wuhan province, Mark, where people are just not allowed to go back to work.
And yet here in America, we have thousands and thousands of bulls pointing to China saying, hey, look, this is what happens when you get better. These bulls that use that argument are literally suspending. We've entered the world of idiocracy. We are now officially in the world of idiocracy, where people do not want to use logical reasoning, where individuals will just point to any data set they can to justify their argument. What is that? When you look at things to justify your belief, what is that from Noah on the study?
On the bias where you justify, yeah, like your confirmational bias.
Yeah, like so, like they're just like, oh look, China's getting better. Like it will get better here.
Whatever makes you feel better, right?
Yeah, right. And that's what bulls are doing right now. You know, they're finding any bit of data saying, hey, look, China's doing good. We're going to get a hold of this. No, you literally have to. China no longer exists from a rational data, anything.
Mm-hmm.
So.
Yeah, no, I agree with that as well. And if you look at this chart here, Noah, actually from a charting perspective, just alone, pure technical analysis, the market didn't buy into that either, because if we truly believe the market data, Chinese stocks would have rallied on this news.
Oh, yeah.
They did not rally on this news. In fact, old support, new resistance, pivot point confirmation in here would be very interesting from a long-term perspective. Guys, this is a kiss of death pattern, right?
Yep, it is. It's a big support zone. It's tested several times, and again, it hasn't powered up through that yet. So I wouldn't be surprised to see it dropping again. And I totally agree with Mark. I don't buy the data or the news. So that'll be interesting to see how that one plays out.
Yeah. Back on the S&P here for just a minute. A couple other big picture headlines I want to talk about before we get into individual companies. Number one, Dr. Fauci was on CNN this morning and actually talked a little bit about some optimism here, Mark. He actually said there are glimmers of hope that the social distancing is having some impact here, especially in certain communities. He even believes that even if we do have a second outbreak in the fall, it may not be as bad as this one. The market is looking for any kind of hope on the coronavirus data. What are you actually seeing right now?
As far, like, once again, coronavirus, they're the trends, and the trends are all negative right now.
Mm-hmm.
You know, are we doing more social distancing? Yes. Now, is this long-term good? Now, one would argue yes. Well, I mean, you have to do something, right? Unless you just want to have massive cases. But, like, you know, states are starting to go the way. We're starting to see this trickle in the United States, where Maryland came out today and said, hey, you go outside, possible jail time, fine. Fines are now going up. States are starting to monitor borders, right? So, I mean, we've seen all of this 2-3 weeks ago around the world, these trends, and it's here coming home to the United States. More totalitarian measures, asking nicely, but some states are not asking so nicely anymore, right? They're saying, you know, well, you know, please stay inside, and if not, we're going to give you a ticket. You know, what New York is $250 to $500. Maryland actually imposing potential jail time. Now, whether that's ever followed through. Arrest warrants being issued. There was a preacher in Florida, an arrest warrant issued for violating the non-essential businesses clause. We're going to see more and more and more of this. And once again, whether they should, they shouldn't, that's a picture for another day. The fact is we're going to. Deaths, we had more deaths in the United States more. Now, the bull's whole argument is, hey, we all know that this is going to happen, but it's all going to get better one day. Now, the 1 day part, we don't know. Governor Cuomo came out in the last 60 minutes or so and said, hey, we're in this is gonna be a long, long, long fight. We don't know at all when the peak will occur, and most importantly, from an economic market standpoint, when things are going to open up, let alone when they're going to get back. We have little bit of data. Everything else right now is guesswork, both on the bulls and the bear side. We've never been through this before. We are in a huge, huge, huge unknown. The one thing we do know, well, there's two broad things we know, and I talked about this, and we talked about this on the podcast yesterday, is that government is going to spend a ton of money, and the economic data and earnings data are going to be really bad. Those are the things we know across the board. So that's where the battle is right now, is the economic data. I mean, that's where the battle is right now.
Yeah, and we do not know what those outcomes are going to be until they actually happen. I really enjoyed the conversation with the podcast yesterday. Noah and Mark, you were both there, and Gino was there. If you're out there and you listen to our podcast, great. We did just drop episode 366, and we explored 3 different investing themes that might be coming out of all of this different situation. People who are bulls, people who are wait and see, and people who are bears. And I would recommend you go and listen to that. I think what Mark's talking about here, very, very valuable, and to wrap your head around it. And we do need more data. We do need more data on all of this information. One of the scariest things on the civil liberties front, guys, I was telling you a little bit about this. Hungary, who is a part of the EU, actually suspended constitutional law, and they said that if you spread fake news right now, you can face 5 years in prison. And I wonder how much social unrest is coming in Europe before it comes in the US even, Mark. You want to talk about communities that are under pressure? They've been under lockdown a little bit longer than we have. They have much more dire economic conditions that we're facing in front of us. I mean, guys, Noah, you lived in Spain, and you know some of the politics around that. Some of the stuff going on in Europe, very concerning still, don't you think, Noah?
Oh, for sure. And again, I don't think that's going to be anything different than what we see here. I think we're just a couple of days behind that. And, I think that they, in general, they're pretty willing to be compliant there. You don't have the same kind of volatility you have here. Most of those countries, have much stricter, gun laws and things of that nature. But I think the potential for civil unrest and just cabin fever sets in. People are going to eventually just want to go out. So my question is where's the tipping point? And what can we do in the meantime to keep everybody calm? And I think, that's the kind of thing, pulling away all their constitutional rights. That's the kind of thing that I think would cause people to want to go out in the streets.
Scary headline.
Yeah, scary headline for sure.
No, I mean, in Italy, I mean, once again, like, to pretend that we're different culturally or at a base level on a human level here in America than other places, I think is a really high level of hubris. So in recent days, Italy has called up military to enforce the lockdown. This has actually been going on for about 10 days, 2 weeks. And there are reports of organized gangs in the southern part of Italy. This is from Bloomberg. So this is from Bloomberg. This isn't some social media post I saw, where they're using social media to plot raids on businesses. So organized gangs are like, in this chaotic environment where businesses are closed down, security, cops are sick, the whole country's in a level of chaos. Organized gangs are using social media to raid businesses. So this is like what's going on in Italy right now, according to the Bloomberg report, isn't like this people just restless and getting out. It's like actual organized crime using, I don't know if they're using Twitter, right? Like, tweet to your buddy, hey, let's go. And businesses, they don't have security guards there right now. They're closed down, they're shuttered. And you're starting to see in the United States, businesses increasingly, and you're starting to see this in California, board up their windows, preparing for social unrest by boarding up their windows, locking down, putting in security measures, and just it's crazy freaking times, right? And one could say, well, I don't want to hear about that. But if you don't prepare, whether it's an investment or on an individual level, for the possibility of outcomes that can occur, it's not living in fear. It is actually using your logic, saying, hey, when crap goes down, I want to be prepared. I want to be prepared.
Yeah.
So
What
I
is
saw
that?
this headline yesterday that really cracked me up. So you got a Van Gogh painting stolen from Dutch museums that were closed by the virus, but it was also Van Gogh's birthday yesterday. So
You know, that has an Ocean's 11 feel to it, right?
doesn't it though?
Sure does.
It's like, what would be that like artistic, poetic? You know, it's not enough to rob. We got to rob something on the guy's birthday to really give it this flair to it. You know, I mean, it has an Ocean's 11. You know, like like, you know, it's like it's we're gonna rob in style. So
That is definitely robbing in style. There's no doubt about it. I wonder if it's insured, though. I mean,
I would
usually
imagine
in those
so.
movies, it's always the inside guy, right? It's
Always the inside job.
always,
That's exactly right. Markets are mixed here, kind of doging on the day, back and forth is what we've seen all morning long. I was doing some day trading earlier, and you're still getting pretty good price ranges, by the way. Even on that little doji tiny candlestick, guys, we're seeing up and down 2% intraday, which in most market conditions, Mark, that's still very, very tradable. You know, we just have seen 4 or 5% intraday moves in the last month or so. So this is lighter volatility than what we've seen recently. Let's keep working through the market here one step at a time. Move on to crude oil if you can. All the other indexes kind of look the same. Crude oil pressing 20 bucks. There were several news headlines that caught my attention. Number one, there was this headline that had no substance again, that the US and Russia are going to discuss stabilization. Now, there was nothing in there that says they expect any kind of deal to get done. And then some Texas, oil men, Mark, they're calling for the state to curb production. They said they want the state to actually institute some of those laws they have the ability to do and stop production by 20% in Texas so that it will force the globe to do something. What's your read on oil right now, Mark?
the same has been for a couple weeks, just getting more excited. You know, negative pricing is likely to occur, and maybe not negative pricing on crude oil futures, but negative pricing on the actual ground. Which can trade short term substantially below. You know, an oil trader, an oil commentator, part of the oil sewing circle yesterday was like, who's going to see negative pricing on the ground first, Canada or Texas? You know, you know, it's almost like that race. Like, how bad is it? Who's going to get there worse first? All of this, like, oh my gosh, Putin and Trump are going to chat, triggers algos, triggers, you know, a short-term burst, but then reality quickly sets in. Unlike you equity traders who are like, oh my gosh, you know, let's just buy because of absolutely no freaking reason, you know, because we've priced everything in. I mean, that's the one joke that we've had at Tackle Trading recently. 10,000 people die. Oh, we have that priced in. 76% unemployment. Oh, we have that priced in. I mean, it's the farcical joke of the bulls right now, is that everything, no matter how bad it is priced in. You know, oil, those kind of comical Trump, Putin talking quickly fade, because what are they going to do? What are they going to do? There's nothing funny money can do here by the Fed, except maybe save oil companies from going bankrupt by just giving them money. They cannot do anything about the capacity issue that is absolutely, it is so surreal to think that we could run out really quickly out of places to put oil, not just in a state, but around the world. Just not have anyone to put, which will create forced production cuts. I mean, oil's very, very, very likely to go down here. But when it's all said and done, and I'll talk about this every weekend, and I'll go into my reasonings far more on my weekend shows, it's going to create a great buying opportunity. It just is, in my opinion.
You know, a couple things in the chat I want to get to, and then I'll get back to your thoughts here on oil as well, Noah, just from a charting perspective. Mark Jones says, looking for a good point of view on HYG. We're going to do some rapid fire later in the show where we let you guys pop in symbols. We'll get to it here in just a minute, and we'll review anything that you guys want to. HYG, what a bear retracement. Wow. Look at that, Noah.
That's pretty good looking bear retracement. I am not familiar with HYG at all. Like, what are the iShares Trust iBox high yield ETF? Like, I don't know.
The high yield, dividend ETF probably. It looks like.
No, I mean, this is a bond ETF.
Is it a bond ETF?
Yeah.
Yeah. High yield bonds. Wow. That's an ugly bear retracement from a technical
And
perspective.
if you understand and can trade, if you think equities are crazy, what the Fed is doing with bonds, I literally have every day said, I want to dive more into this. And I run out of time because there's a billion things going on in life right now, at work, customers, shows, all of that. The bond world and the effect of the Fed on bonds, I can't even wrap my head. So if you have a better feel for the long-term, short-term impacts on bond prices with all of the unprecedented moves of the Fed buying bonds, did that rally start on March 23rd by chance? Or
Bottoms
Yeah.
one on the 23rd.
Same as
March
stock
20,
rally.
and the reason I pulled out March 23rd is March 23rd is the date that the Fed started buying corporate bonds for the first time.
Mm-hmm.
So
Mhm.
obviously that decision has impacted areas of the bond market bigger than others. The cause and effect, the fundamentals, how this all plays out, I don't have a freaking clue. I just know on March 23rd, the Fed started doing something it had never done before. And you're seeing this huge, massive rally. I'm sure there's some really, really smart Wall Street traders that are totally raking it in from the Fed right now.
Mm-hmm. You know, Jared Taylor also says the Spanish flu lasted from 1918 to 1920, and the market did pretty good for the next 9 years. Yeah, we're not saying we can't see good bull markets again. I mean, in the history of markets, Jared, I don't think anybody would argue you're never going to see a bull market. Just short-term disruption. I think the only real argument is how long does it last? What is the impact? Is it 1 month, 3 months, 6 months, 18 months? You know, that's the really, really dire, obviously, scenarios that some bears are
No, I
painting.
mean, we talked
But
about this on the
yeah,
weekend shows and on the podcast. It's a matter of timing. Like, I have a bullish thesis. Like, I
Mhm.
fall into the, yes, one day the coronavirus is going away, the federal stimulus. My approach, which differs, is only, what is it? It's a matter of timing. It's a matter of approach. It's a matter of caution at the current moment. You know, eventually we're going to get ahead of the coronavirus. Eventually there will be a ton of money put in. But to
Mhm.
say that today's a great optimal buying opportunity, that's guesswork. That's
Yeah.
guesswork. That, you know, so.
Then Beautiful Fang, what a name right there. Is it a good time for someone new to enter the stock market? If so, what is your advice? A simple one for me, you shouldn't enter anything with real, risk on the table until you know what you're doing. I always say the same thing, education before application. There's a bunch of stuff. You can come back and join us every day as we break down the markets, kind of talk about it in our daily routine here on YouTube. We also got some courses over on tackletrading.com. Some of them are part of our premium or pro service, which there's a charge for. But we even have, I think, a couple free ones as well, like the 7-step guide to trading. So I'd start there. Start with education, not application. Don't worry about when to get in until you know what you're doing. But definitely a good time to learn the stock market. There's no question about it. Let's
Well,
see.
and I would add to that, Tim. I don't think we're at the bottom yet, and I think the huge investing opportunity is still out there on the horizon. So what an awesome time to prepare yourself, for that opportunity. Again, in the meantime, traders can have fun trading the volatility, and it's all comes down to risk being correlated to control, and the more you know, the better you can do that. But I do think that there's going to be a tremendous investing opportunity at some point in time. I'm with Mark though. The question is when, and we haven't seen the data to really support it yet.
Back on HYG for a second. Mark clarifies something here, Chucky. HYG is a non-investment grade. They're not Fed purchasable. These are junk bonds.
Yeah. All right. So yield. So what's happening in the, okay, once again, like, I know enough about bonds right now to sound smart, but probably not enough to actually know what I'm talking about. So let's get that disclaimer out there right now. All right. So the Fed, its purchasing of bonds is on an investment grade level. So how bonds are broken down, and just from a broad standpoint, there are different grades of bonds where you have your, for lack of to use more common terminology, your safest bonds, those AAA type bonds, and then it goes down into different classifications. So sometimes you'll hear a company that their credit rating gets downgraded. And what happens in that situation is that the company was at one level and they got brought down. For example, that happened to Boeing. That probably will happen to the entire United States of America at some point, the way we're spending money and being so reckless. But there is credit ratings going down. And so this term called junk, and you've probably heard many, many times in your life, junk bonds, junk
Mhm.
bonds, junk bonds. What junk bonds are is that is an investing colloquialism. What is it? A terminology saying whatever, anyways, it is something that describes things on the lower levels of the credit rating. So if a company has a lot of cash and are healthy, great payment history, all of the different things that go into these credit ratings, and go watch The Big Short to know like a little bit more about this. They're going to have the highest classification of bonds. They're not a junk bond, but certain things at lower levels have higher yields, more perceived risk with the company and the lending, and those higher yields have been exploding in recent days. So the money from the Fed, going to those higher investment bonds, that's what they're doing. They're not purchasing, if my understanding is correct, I'm not 100%, I'm pretty sure I'm correct, but the Fed is not purchasing junk bonds as part of their package. And so because of that, and because we're in this nightmarish situation of potential credit defaults and companies going out of business, the yield on these junk bonds that aren't being bought by the Fed right now is exploding because there's now more perceived risk, right? There's now more perceived risk. And when there's more perceived risk, the yield on a bond goes up. And that's probably what you're seeing reflected in the price appreciation right now.
Well, because quite frankly, we are going to see company defaults. And so not all of these, I don't know exactly what's in HYG, but just in this investment type area of junk bonds and high yield bonds with corporations that don't have guarantees, Mark, some of these companies are going to default on their loans. That's going to happen, whether it's in retail or oil. We can think of industries that are going to stay, under stress no matter what the economic outcome is. Retail right now, in fact, Noah, give me RTH, if you will. I was thinking about retail this morning. Macy's, The Gap, who owns a lot of the major ones you go to the mall and own, LB and JWN and KSS, they're furloughing their employees across the board right now. We're talking about 80,000 employees here and 50,000 employees there. You're seeing massive layoffs in retail. So, obviously, certain areas of the market, there's concern here. Retail is one of them. Noah, give me a read on that chart real quick.
Well, that's a pretty good looking bear retracement. Big rip down. It found a common bottom down at 95-ish. And then we see it rallying up, pretty heavy selling volume. And then the rally, you see the volume tapering off there as prices rise into that falling 20-period moving average. Haven't quite filled the gap, but they've gotten to the bottom of the old support resistance neighborhood there. And, with that falling moving average and, the general economic outlook there, I suspect you'll see another leg down.
Yeah, I agree with that as well. And concerning news, obviously, out of retail, you're going to see some of those. They even said they're not even paying their leases for April. So we're going to continue to see these kind of headlines in the short term. Back on some of the broader markets for a minute. Give me a quick look at gold. Gold back down to $16.10 an ounce. I don't know how to read this technically on the daily chart because it doesn't really impact my thinking. You got a triple top up there. I know if it breaks 1700, it's a clear signal if you want to trade it. I know that if you want to just buy because you believe in the investment thesis, you probably don't care about the chart. But how are you reading the price action here, guys? Why is gold coming back for about 6 days in a row? Is there any reason in the short term that you guys can think of?
Fed action, the same Fed action that'll lead to inflationary prices that'll cause the price of gold to go up, stabilizes the market, and you're seeing some money pull out of that. It's probably my best estimate. Also, technically, it just hit 1700, third time in a row without breaking it, and so you got some probable profit taking. Anybody who caught that rip probably wanted to lock in a game. Yeah. So there's probably multiple faceted reasons for that, but this 1600 zone, I think, is a reasonable price to watch for buying. You got moving average clusters right there. You got 3 moving averages, an old support resistance zone, and a big fat number. You'd want to wait for a signal candle and maybe upward confirmation if you're looking for technical confirmation. But from an investment thesis, again, different price is not a bad opportunity to pick it up if you want it.
Mark, does the chart matter to you in gold?
Well, just in the sense of understanding price action, if you go to an hourly chart on gold, put on some moving averages, which you have, just pop on over to the hourly chart. I mean, it doesn't change my like fundamental thesis, right? Doesn't affect my fundamental thesis. But like, the weekend, pro members that attend over the weekend, I'm a big believer in these moving average pockets, right? When you get these huge moving average pockets, these can become technical not gap fill, that's the wrong word, but they can fill really quick. And so like gold had this huge moving pocket to the downside. And so unless you have that catalyst, because remember, things don't go up every day, even with the best fundamentals, they just don't go up every day. And so technically what happens is when you get trapped in one of these big moving average pockets, well, what do algos do? Algos don't care about your fundamental thesis, not at all. And so, you get these big moving average pockets one way or another, and they get filled oftentimes in rapid order. So,
what's interesting here, I got to get your take on this. If you look at GC here on the hourly chart, you're above some moving averages, below the others. Take a look at the GLD though. Look at, GC is holding 1605. GLD just broke below the 20. Does the ETF or the futures contract matter to you more here? I mean, GLD is a really, really popular ETF.
No, because it's the futures that drives the price of GLD. It's who's the dog and who's the tail.
Right.
Who's the dog and who's the tail?
Futures market's probably the dog, right?
Yeah. And so GLDs, and so you can get the technicals on GLD. This is why I look at futures contracts first. The technicals on the ETF that mirrors the price, that's the tail. The technicals on the futures itself are what matters. So
the markets are at the low of the day here as we're talking. They've been selling off since we started the halftime show. Actually, just a little bit. We're down at 25.89, kind of holding the intraday range still. A little doji candlestick near the lows of our intraday channel. Going to be interesting. Obviously, day by day, we'll keep breaking this down. Give me the dollar, if you will. I want to talk a little bit more about all the money that they're printing and the helicopter money that they're throwing at the economy. There's two more deals in the work here on the congressional and on the government level here, guys. I hear phase 4 deals on the way, the Senate and Congress. And part of me thinks maybe the reason why the Democrats so quickly passed that phase 3 deal was they were told, we'll take care of you in the next bill. And I'm guessing there's going to be some bipartisan support for some other things that are going to happen there. We'll see if that shakes its way out. They talk about $600 billion, another package to individuals directly and more for small businesses, as well as municipalities and states. They want to have some lending and some funding instead of in case some states and cities have pressure in their bonds as well. But then even bigger, in my opinion here, guys, is Trump is talking about a $2 trillion infrastructure bill. Mark, how far will they go? Is there any limit to them wanting to create money, make money out of thin air and throw it at this problem?
No, I mean, this is why I am if you had to put me, I'm on the bullish side. I just have a specific bullish thesis on how to approach the market. And, I've shared that, for dozens of hours over the last couple of weekends. But like I side with the bulls because there is zero limit to what this specific group of individuals, and if you think there's a whole lot of differences between Democrats and Republicans on spending money, yes, there are issues on the environment, on abortion, on gun rights. Yes, there are things that will make you a Republican or Democrat. But when it comes to spending money, yeah, this group of individuals that we have on Capitol Hill, they have no problems spending infinite money in this situation. Now, once again, right or wrong, should they or shouldn't they, that's irrelevant. We are here to analyze what are the most likely outcomes and make investment decisions based on those outcomes. And we can save the debate of whether they should for another day. But yeah, they're going to spend whatever it takes,
Yeah. Listen, I mean, I actually really like what I'm hearing about Trump talking about infrastructure. This is something I've wanted for a long time. I supported it when it's one of the issues that he was talking about when he ran in 2016. I was like, yeah, I believe in that. Steve Bannon even came out and said, we're going to do $1 trillion infrastructure package. And they never followed through on that at the time here, Mark. We need, if you've traveled the country the way that I have, And no, I know you've been in a lot of airports. There's a lot of them that need money. They need
Oh, yeah.
updating. They need infrastructure, the roads, the bridges. There's a lot of this stuff actually. And you think about your history that was built back in the 1930s after the last economic collapse that was very, very dire and for a much longer period of time. So I support it, quite frankly. I mean, listen, if you're going to print money, you want to build something, build a road, build a bridge, build an airport, build a new rail system, all that kind of stuff. But Noah, as a libertarian, you have to, and somewhere deep in your libertarian heart, you have to hate this. All this
Yes
money
and
creation.
yes, but if this is where I tend to get I fail the purity test for libertarian think tanks. They'll be like, no. I think that the infrastructure build's wise. In the past, when we've had economic issues, that's been a way to get people back to work and back into some GDP and growth and infrastructure that pays off long term. And, I think there's benefits to it. And of course, I don't always love those kinds of ideas, but which would you rather is kind of one of those things. Like, would you rather just keep throwing money at corporations and do it that way? Or would you rather see that money come back and benefit society as a whole?
Listen, I build it, spend the money. Fine. I'm good with it. I would love to see a rebound and a rebuild, which is where the longer term thesis come in here, Mark. One of the things that Goldman Sachs talked about yesterday, I totally agreed with, is I want to see what the impact in this and the actual use of this money is. If it just goes to bailouts to distressed industries and companies through loans that they end up failing on, I will hate it. If it ends up
and
building
that's the key,
stuff, right?
Like they can have 2 trillion, they have gazillion trillion, but if all they do is to stabilize companies that financially engineered, this is one of the things, going to get on my soapbox. People complain, oh, the Kennedy Center and the Dems porked the bill. Yeah, I don't like that either. But how come those same individuals aren't saying, hey, why is Boeing getting money when they spent a decade borrowing money using financial engineering to drive up their stock price? And they're getting what? Infinite times more money. How about we just say it's all bullshit? All right?
Mm-hmm.
All bullshit, except where it's actually needed. Because if we have a truly corrupt system where financial banks, Mnuchin's buddies, Nancy Pelosi's buddies, we're all the buddies, and this is going to filter money to the rich, this trillions of dollars isn't going to fix this problem. It's going to make certain individuals rich. It's going to help out certain companies. It's going to help out certain executives. But as far as helping America, the average individual looking for a job, yeah, it's not going to help that if we have a truly corrupt system with the money being filtered to fix problems created by Wall Street buddies.
Yep,
so
that's right.
And that's what Goldman was essentially saying. Where's the money going to go? You can spend it, but if it's only going to a select few, then we got a problem here.
I agree with that. Let's talk some individual companies here. By the way, Bitcoin holding steady about 6,500 for about 2 weeks now. So we'll see whenever that thing actually does something, we'll come back to it. I know it's a bear retracement like the whole market.
Could we just never?
Listen.
How about you start your own YouTube Bitcoin show?
Dude, I'm telling you, people would watch it.
I know they would. No, I'm saying they would.
Yeah, absolutely. Well, it gives me joy that it bothers you. So we're going to keep bringing it up. I'll tell you that. Let's talk individual companies here. Ralph Lauren, another big retailer, RL, they are closing their stores worldwide temporarily for the month of March. We're seeing this across the board in retail. Is retail still shortable down here, guys? I mean, if RL breaks below support, could you short it?
Yeah, I think so. I think there's limited downside, but I think there's downside.
Yeah. Yeah, I mean, distressed industries, Mark, across the board. I mean, this is where the pressure is in the market. Even the bull thesis, none of them are painting a picture for like shell drillers or retail shops in the short term. They're talking about big picture in the economy. I mean, do you think you could still sell retail? Or are you thinking the other way where you're looking for bargain hunting?
Retail, because I mean, my thesis is just right now, I feel like for me, and once again, everyone can have their own damn opinion. On how they're doing it, is I have a bullish thesis, but I have this like the government is going to save companies, provide credit, all of that. But even with that thesis, man, some of these clothing retail stores, boy, it's a tough sell to me. It's a tough sell because unless they're literally granted money, and once again, what is the Fed doing? Oh, they repealed the sunshine law, so we don't get to know what the Fed's doing for the rest of the year, maybe ever. You know, like we've had less transparency of how your tax dollars are being spent. Yeah, and you might not know that Sunshine Law, it's not in effect for the Fed right now. That was part of that $2 trillion package. We have zero idea.
I didn't
So,
know that, actually.
oh,
So
your
they
government's
snuck
corrupt.
that into the bill.
Your government's corrupt. You're surprised about
No,
that?
I knew that part. I didn't know they actually repealed the Sunshine Law.
Like,
So,
I
so
mean,
we
we
don't
are
get to know
pitted.
what the Fed's going to spend this money on?
We are pitted Republican versus Democrats by these individuals on this high level so that we can argue on message boards. And I hate Nancy Pelosi. I hate Steve Mnuchin. Yeah, it's nonsensical. What they do behind the scenes as they let us play in their little puppet show is absolutely disgusting. You know, I have no doubt years from now, while everybody's yelling at Nancy Pelosi, while everyone's yelling at Larry Kudlow, just pick your side because they're both yelling, what they're doing behind the scenes. So how do we know that retail is going to be granted money or given money, or which ones? Why? Because it's now freaking hidden from us. It's now hidden from us.
Interesting. That's disconcerting. There's no question about it. Visa as well. Let's keep working through companies here. I want to get to rapid fire here in just a minute. Have some fun with that as well. Visa, they cited they're going to pull their guidance. Number one, they cited meaningful deterioration of volume in the month of March and payments as well. I think some people are going to stop paying those credit cards in the short term. Wait to see what happens here, guys. I even got an email from Wells Fargo, who carries my note on my mortgage, basically saying, if you have any problem paying, we will give you guys a furlough period of 90 days if you just give us a phone call. I mean, they're getting in front of it. I
So
think
what if I'm not having financial difficulty? Can I call and lie?
I think so. They basically said, if you cite coronavirus, you can take 90 days off of paying your mortgage. I got that email in my inbox this morning, and I wonder if more of these companies are going to get in front of that. And I think a lot of these companies are hoping that this is going to be a 3-month window, and then people can get back to normal life, right? That's the hope. That's the bull thesis. We'll see. I mean, Visa.
I'm stupid. I'm going to still pay my mortgage. I probably should take advantage of that, but it just feels wrong. I mean, if you can pay and you don't, I mean, am I just so old school that it's just like, it just feels wrong, so I won't do it?
Well, I mean, I don't know. If somebody's out there and they literally have lost income, let's say that you've lost a portion of your ability.
No,
to
I know
make
if
money,
you have,
take advantage of the system.
Yeah,
right?
take advantage of the system if you've actually lost. But I'm saying if you haven't, if you have the ability to pay your mortgage.
Oh, I think so too, Mark. I'm with you. I mean, I was raised that way. You were raised that way. You make a handshake agreement, and you got to deal with the bank. If you can pay them back, and you weren't affected by it, I would still pay for sure. Yeah, I would be right there with you. But if you were in any way affected, do not ever apologize for using the system in place. I had a friend once who wouldn't file for unemployment, Mark, because he didn't want to be that guy. And I'm like, you lost your job. You need the money. They've been taking money out of your payroll taxes for a long time. Why would you not use the system that you've been paying into, Noah? The government's can take the money. Might as well do it, right?
Yeah, that's certainly the case. So
absolutely. Let's take a look next at BlackRock Financial, BLK. I want to get your take on Larry Fink's comments here today. He sent a letter out to shareholders, and I thought this was really compelling. I actually read through it. He said, in my 44 years in finance, I've never experienced anything like this. And I think that's actually true for a lot of market participants. We talked about it all month in March. It's not like anything we've ever seen, not like 08, not like 2000, in some ways different, but how fast and how furious this was obviously came on to a lot of people. But he also said that he expects the economy will recover steadily, Mark, and sees tremendous opportunities for the long term in today's markets, but there's also significant challenges ahead for heavily indebted businesses. Basically, he goes on to paint that middle ground picture that he's a bull eventually once the price action comes in and once things settle down and once you have more clarity. Is that where your head's at as well, Mark? And we painted those 3 arguments yesterday. When Larry was, when I read Larry's letter, it sounded a little bit about where your mind is right now. Do you think this is a buying opportunity eventually?
Yes, I do. Eventually, because we've like those 3 camps, and we've been talking about them a lot at Tackle Trading the last 3 days. The uber bulls that say just get in right now. I don't want to miss out on a rally. Everything's going to be fine long term, and the Fed has our back, and the federal government has our back, and everybody has our back. But they just don't want to miss on a rally. They're really FOMO driven.
Mhm.
Then you have the second group who's like, yes, it's all going to be good. There's going to be opportunities long term. And it sounds like that's where Larry Fink is, but it's like, be smart about how you approach it. Like, I literally don't know someone who throws all of their chips in the middle right now. I don't get that with so many uncertainties. I mean, you were literally saying, I know the future, and so I am just pushing it on. It seems like something that a 22-year-old kid would
Seems
do.
foolhardy. Yeah,
It seems
it
like something
does.
a young kid would do, but you mean like, hey, in the market, this is buying opportunity. Look, it's cheaper than it was. I mean, it just
Yeah.
seems very foolish. But for those individuals, and we are doing all we can for our pro members right now, and send us an email, I'll get you set up on a free trial, a team at Tackle Trading. We are doing everything for our pro members right now to try to help them navigate their decision-making process, help them navigate their decision-making process for the long term, because it is like, you know, Larry Fink's been around a lot longer than us, right? And he said he's never seen anything like it. Nobody's ever seen anything like this. This is a unique situation nobody's ever encountered. So we're doing all I can to like create models, situations. You know, I have how I approach it. I'm sure you guys all have how you different approach it. But like, yeah, I fit into that bull thesis, but I just don't fit into the bull thesis today. I'm willing to miss out on a rally. I
Mhm.
want cheaper prices. I want bargains, and I want that type of things. And I can maybe get a few naked puts along the way. I can find some opportunities along the way. And that's how I'm approaching the market. And 6 months, 12 months from now, I'll be happy with the decisions I'm making today. And maybe not happy, content, because I'm trying to approach it from a logical, conservative, not greedy, not leveraged, just nibble here and there, find opportunities when they pop up, try to take advantage of them. On the Sunday show, we talked about US Steel as one of those opportunities. Pull
Yeah.
up old US Steel if you would.
You
Yeah.
bet. That was
And
one that we talked about this morning in the lounge. It's pretty awesome little
And
setup.
so with pro members, we talked about US Steel on Sunday as a potential, hey, you know, the logic behind it was infrastructure's coming. That didn't take long, right? Here we are on Tuesday announcing potential infrastructure bills. I mean, I'm surprised at the speed in which that came. US Steel is not going to be allowed to go bankrupt in this environment. Infrastructure type things are not going to be allowed to go bankrupt. That's my thesis, right? Now, is there a 100% chance that I'm right? Of course not. That's not what we do in trading. That's not what we do investing. We place high probability bets where we see them. And with infrastructure money coming in, well, you're seeing the price action relate to that today. And so how do you want to play US Steel? I mean, that's really the question then. Do you get in today? Do you sell a naked put? I'm always a sell a naked put today and reevaluate tomorrow kind of guy.
Mhm.
But it's these type of opportunities that, or these type of, excuse me, potential trades that we're helping work with our pro members, that we see that as good bets. Now, can you still lose money? Of course you can. That's investing, right? US Steel could go bankrupt, but some of those naked puts at lower levels are starting to look attractive. You know, that's why for the first time ever, guys, for 2 straight years, 2.5 years at Tackle Trading, I've been like, screw US Steel. I don't like this company, don't like this company. And I'm like, hey, on Sunday, I was like, guess what? Times are changing. I hate it, hate it, starting to like it a little bit now, And we'll continue to do that for our pro members this week and next week. And until this dang situation, we're going to be working double and triple and overtime to help people make the best decisions they possibly can in this market.
Yeah, no doubt about it. And by the way, you know, I've really been happy with everybody on our team, including you, Mark, and Noah, and everybody. I mean, we all know the situation in front of us, guys, and we love trading. We love this community, and Mark is 100% right. Mark did a bunch of webinars over the weekend. If you're a pro member, go watch the recordings. And Noah, you actually did a really fun stock report. I had a chance to review that. I enjoyed that. And there's a lot of companies on that report. And I did the option report over the weekend. A lot of these stocks are really grabbing my attention. I want to run through a couple of them real quick. Then we'll do a
Just
quick
one last thing
Uh-huh.
on that. One of the things that I've always loved about Tackle Trading, and one of the things I really like in this environment, is I'm trying to get Noah on a couple of shows a week. I'm trying to get Gino on a couple of shows a week. I'm trying to get Tyler on a couple, so the individuals can see the different ways people are approaching this market. because my way isn't necessarily for everyone else. Gino's way might not be for everyone else. Noah's ways might not be for everyone else. But get like what I think are pretty smart individuals that have a lot of experience in doing this and having people take the style. I know some of people, I've gotten emails at Team of Tackle Trading on some of Gino's trades like, oh my gosh, more butterflies. I just did a great butterfly. Yeah, so that's going to resonate with some people. And Noah, I mean, I know Noah was, teaching bear call spreads as protection things that I've adopted in sharing with people over the last 4 or 5 months as a way for downside protection because of volatility situations. So it's a good chance you find something that you identify with the variety of coaches we have at Tackle Trading here.
I love it. Let's take a look at some of these stocks here. Noah, DocuSign, you had this on your coronavirus watch list. People are going to be doing more documentation from home as they're working from home. Stock broke out here today. What a beautiful breakout. Noah, what are you seeing there?
Yeah, it popped out. And if you drop that down into an hourly chart or so, I think there's an opportunity for a retest here. This is kind of looking like a bull retracement, and you got that $90 old resistance ceiling, rising 9. There might be another opportunity to catch that. Anytime you see a stock, break out like that, that's, good sign. And when it pulls back down into that old resistance ceiling, that might be an opportunity. It may pull a little deeper, but I like the setup and I like the energy coming out of that. And quite a few of the stocks on that watch list have really popped.
Mm-hmm. Go take a look at EHTH. I don't know this stock, Noah. You added it to your report here this week.
Yeah.
Triple top right at 150, by the way. What a beautiful kind of exact pattern up there. You break out of that resistance, guys. There's some clear air to the top. Who is this company, Noah? Do you know?
Well, it's eHealth. It's got some fundamental strength and relative strength compared to the rest of the market. It's been, one of the toppers on the charts out there. And I don't know too much about the company itself. I did quickly look at their fundamentals, and they seem relatively healthy. Low debt company. Yeah, they've got good upside potential there. And again, just knocking on that door. It's a little overextended at the moment. It's not quite overbought into that breakout setup, but I certainly like it. Anytime I get a breakout, I like it. With the recent volatility, you got to be cautious, but I think there's some upside on that.
There's dozens of companies on those lists. Go watch the full video on the stock report over the weekend if you've not done so yet. A lot on the sell the rip list that I still actually like. Look at GPN here, Global Payment Network.
GPN?
Domino's Pizza looking pretty good as well. But look at some of these rip candidates. I mean, it's not there yet. It would have to break below that 9 EMA, but there's a lot of real good bear retracement patterns developing in this market. I'll just quickly look at a couple here. We talked about Nordstrom's, but look at JWN. Absolutely on a low base. There's still downside there, quite frankly, which is sad to say, but it's true. Sherwin-Williams, SHW, break below 450. There's some step system application here that you could use. I mean, we're bear retracing across the board in so many marketplaces. And then even Square, financials. The finance sector, Mark, and payments and credit processing, I still think you're going to be in for some pain here that they haven't dealt with yet. I mean, Square is dependent on people spending money, right? Visa withdrew their guidance here, a break below, say, 50 there. I mean, there's two down.
Credit cards are going to just get you. Credit cards is one of the more difficult industries right now for me because I love the industry traditionally. They are fast, they're efficient, transaction oriented. A company like Visa, it has long been one of my go-to buy dip type companies, just an absolutely fabulous company. Square is a trader's darling in which you can get really nice, huge rips. So there's so many companies in this space that I like. These companies are going to...
AXP's been one of the best fundamental companies forever, but people aren't going to pay their credit cards for a couple months.
But Visa doesn't lend.
I get
Visa
that.
doesn't lend.
But even just consumer behavior, don't you think? Don't you think consumer behavior could affect this in a way? I mean, people aren't going out. They're not going to the malls. They're not going to restaurants. They're going to the grocery store. And maybe this is, I don't know. I think the market.
So total transactions are obviously going to be down a lot, right? Mm-hmm. Just think about yourself. How many times have you used your debit card in the last month?
Mm-hmm.
I've used it a lot, a few times, but not nearly like I usually do. So total transactions are going to be down. But is there stability? Isn't that the $1 trillion question? Where are you putting your money if you're a bull? Are you putting it in Apple? What's your reasons for it? Other than its freaking name is Apple, and you don't have the energy or the smarts to look anywhere else in the investing universe.
You know,
what
that probably would be an okay thesis.
You know, like, I know Apple, I'm going to buy Apple. Like, listen, it is the 22-year-old kid mentality. How many stocks do you think the average 22-year-old wannabe trader knows? They know Netflix and Facebook and Tesla and Apple. And yeah, I mean, and that's where the brain power stops. But why are you putting it in it? Like, where are you putting your money and why? And credit cards are like, I want to get interested. How bad do you think it's going to be? Like, you know?
Apple's a tough one. I actually think Apple might be the toughest argument in the market. Here's the argument for the bull side, Mark. They have 250 billion in cash, and we're going to get back to business by the fall. That would be the bull argument. The bear argument is pretty simple. It was at 142 a year ago. Why do you think it can't go lower? People aren't going to buy iPhones when they're worried about paying the mortgage, you know? So I think that's a longer debate. Why don't we punt on that debate till tomorrow? Because I think we could actually dig into this one quite a bit. Apple's a tough one here, Noah, because it's a market darling. It's made a lot of people a lot of money over decades and decades and decades. One of the biggest companies in the world, obviously, and one of the most known, recognizable companies. What's your read on Apple, Noah? Quick one.
Well, I think that the fact that it's closed back up above its 200 would lend some strength and credence to the bulls. There might be a V-shaped recovery in there, but then you're also still below that 20. So I could see that if it breaks back down below 250, I think there's another leg down. And then, Steve asked in the chat, would you consider like naked puts on that down at a low price? Well, would you? At what price is it a value buy? I mean, 200 is a big number. There's a big support zone down at 175. I think the buy the dippers will pick this up as it drops. Doesn't mean it can't go lower, but they're cash rich and still one of the industry leaders. So, I think even with another leg down, there's still an opportunity here.
Mm-hmm.
Doesn't it come down to price? Because like, I hate Apple right now at this price because I think there's so much uncertainty. But if Apple were to drop $100, all of a sudden Apple starts shooting up my priority list.
Sure.
Because I can be like, I hate Apple because they're not going to get any free money. We have zero idea how long this is going to last. We have zero idea about consumer behavior. But at 120, all of a sudden I'm like, give me some Apple. All of a sudden Apple becomes a top 5 candidate. So it's weird, right? It's weird how we're looking at different companies right now. Because a company like Visa or Disney or Apple, like at certain prices, that's where I want to be.
Sure.
But gosh, it just seems like they're so elevated right now with all the risk in the market.
Sure.
Well, if I'm going to be working from home more, I might just need a new laptop, or I might need a new Apple desktop or something like that. Like you might see some buying off of that, but
let's stop kissing Apple's ass here. That's
no,
a bearish
no,
retracement.
I will not.
That is an ugly chart pattern.
You're right. It's
There's
an ugly
no
bearish
doubt
retracement,
about it.
but I will not stop kissing their ass. So there you go.
Oh, coronavirus makes us cuss more. There's no doubt about it. When you're working from home, you're all pent up. I get it. C'est la vie. There's no question. I haven't used that phrase in a while there, Marky. Real quick, I promised these guys rapid fire. We're going to take the first 10 stocks that pop into the chat. We're not going to go past that. If you put stock in, let me know. And we will run through this one. And if you know this game, you know it because you're a long-term member of our community. If you don't,
let's start doing rapid fire at the end of every halftime show.
It's fun. It's fun. People like it. We've been doing this one since our very first coaches show, actually, I believe.
And I actually going to do rapid fire. My answers in because I don't give two craps about technicals right now. It's, do I love it at this level? Where do I love it? That's what I'm going to do on rapid fire.
I got you. We're going to start with Mark, oldest to youngest. Mark, Noah, Tim. Let's do Seagate Technologies, STX.
I don't know enough about Seagate. So what? We got memory data on Seagate, right?
It's looking like your average tech stock in the market. It went from 64 to 40 back to 50.
Let me see WDC real quick. You probably will see a similar pattern on WDC. Yeah,
very similar. Yeah. I think Seagate looks better though. Seagate looks a little bit better. 40 is obviously a nice price zone for it. The rally up there, I think it's in the middle of a range, still has some bearish potential.
It feels like a tech play. You're betting on tech in general. Yeah. That's what it feels like.
Micron here from Marquise.
I'll tell you what, that's a pretty dividend for the price of the stock, by the way.
Yeah. Yeah.
I mean, I don't hate memory data, whether it's MDC or STX, right? Memory data doesn't seem like the worst play, but
know what? Rapid fire.
Micron feels bearish.
It does. Yeah, chip
Well,
makers are going to be hard. It's a fundamentally sound company, though, Mark. At some point, Micron's going to be on your list, and I know it. Where that price is, probably not at 42. It's probably closer down to 35, I'm guessing.
Dude, I shop at the dollar store, bro.
Give me
I'm
Micron
looking,
at 10. All right, I got
yeah,
you.
I shop at the dollar store.
ABT next, Jimbo. I'll take this one. Oh, baby, talk about the old kiss goodbye here. What a really interesting pattern. Falling red candlesticks for a couple of days here. Your guess is as good as mine here. Abbott Labs, guys. I mean, healthcare has been a difficult one to price in. That's a V-shaped rally back into some real concern on resistance, but I would not bet against that company until you get confirmation. You're in this no man's land right there, until you get it. Strangle could work long, I'm guessing, Jimbo. I would not play that as a short strangle. Too much potential movement on the volatility. Let's see here.
Boy, long
DG.
strangles are really, really, really expensive.
Might
Right now.
have to debit con it. Yeah, Mark, good call.
I
Might
like
have to do
Debicon
something-
idea better. Yeah.
Debit con. Yeah. DG Dollar General. We'll give this one to Mark since he shops at the dollar store here.
Dude, I've long said for years and years and years, one day the only things that are going to survive in retail are like Walmart, Home Depot, and dollar stores. Dollar stores are going to they sell some of those staples. So a lot of you, have you guys been in a dollar store in recent years?
Yeah,
I have not.
When I traveled down to Texas in November to see my daughter when she was stationed down there, we stopped in a couple because in every small town in America, there's a dollar store. They're very, very common as you're traveling. If you're driving the country,
Yeah, and
you'll
they
see 'em
sell
a
a
lot.
lot of staples, right?
Yep,
In a
yep.
recessionary type environment, they might get more traffic than others. The only question on dollar stores, because from a consumer demand, they do well in any scenario moving forward.
Mhm, mhm.
The
I
only
like it.
question, the only nightmare question for a dollar store is if they get cut off from their supply for whatever reason on different things. But as a general rule, outside of that scenario happening, when dollar stores take dips, when those naked puts, pretty good area, pretty good stable area to be. They did great before. They'll do great in any environment afterwards. So look for those dips, those dip opportunities. Pretty healthy place for.
I don't know if rapid fire is your game, bro.
Well, what are you supposed to say? I mean,
Yes, no. That's it.
I don't know. I mean, I think the analysis was great. I actually agree with it. I'm just, I don't know. I mean, rapid fire. Let's see if we
Talk
can
faster,
speed this
Mark.
up. No, I'm giving you 5 in a row. RNG.
RNG.
Uh-huh.
Well, Whipsaw
I don't know the
Central. That's a
company.
tough one. I don't know the company. Ring Central. Is this the company that makes the doorbell stuff? Don't know.
Maybe makes sense.
Maybe.
But
Yeah.
I don't know the company. Chart
I'd
looks
watch for
interesting.
a breakout. It's got to pull back into the rising 50. Might be a catalyst. Needs a signal.
Kroger, KR.
I like it on the low base. It showed its, upside. I think it needs upward confirmation of probably above 30.
PBR.
Pabst Blue Ribbon.
Mm-hmm.
Petro bearish. I think that's got more down, and then at a certain point in time, it's buy.
I'm having fun with this.
Play oil over oil companies. That's been my mantra.
I think that makes a lot more. It makes sense to me, Mark. That makes a lot of sense.
Well, oil companies going down, price of oil eventually goes back up, right?
So, there's risk of ruin on oil companies.
Sure. Mark, I'm going to give you 4 in a row. Boeing from my man Ben in Seattle.
No.
Walmart from Beautiful Fang.
Yes, at lower put levels.
We talked about this one just the other day, Noah. It founded that neutral range. A lot of people are flocking to safety on some of these plays. Looks almost like Dollar General to me, guys. I mean, those two charts are pretty similar. UNG, Mark, natural gas from Fortino.
I think there is a long-term opportunity. Pull up the weekly chart. You can play UNG in 2 ways. You can start selling naked puts on some type of single, or you can wait for it to finally cross the weekly 9. It's been, and that's not going to show me shit, So that weekly 9 for the last 2, 3, 4 months, every time it's come up to that weekly 9 from a technical level, I shared my long-term thesis on UNG this weekend. I think you have 2021 price appreciation when you get this Armageddon event in the oil market. So just how do you want to play it? Do you want to blindly play it? Do you want to wait for a technical reversal signal?
Shopify, one more for you, Mark, and then I'll take a couple.
Market darling for a long time. So, you know, they are one of those, you can make a lot of money on severe dips when they rip with the market. It's like, it's almost a preferred play. Like if you get huge sell-offs in the market and you're like, I love the market. Well, look what it did, you know, 320 to 450 real quick. It's a market darling. So those really big dips, if you're looking for something that can explode, Shopify's you right there in that range.
And I'm having fun here, guys. Let's keep this up. A lot of people are interested in this. Let's bring up I'll take the next couple. Gap. We talked about retail. GPS. Absolutely a stay away until you get clarity on what's going to happen with those real estate contracts and when they're going to get back to business. They just furloughed so many employees. They're not even open for business. Down here, I don't really feel like selling short on a $7 company. It just came from 20. I think there's easier trades, but I would understand if somebody wanted to play that. We talked about Seagate already. Give me Ulta. I know Ulta is one of your favorites, Noah, just long-term. You've talked about this one so much over the years, but that's an ugly bear retracement. Break down below that pivot, guys. I think there could be, got to run the reward to risk, but I think that's tradable potentially there if the reward versus risk ratios look good as you apply your step system rules. Give me ZTS.
What was that one?
BTS.
Veritas.
And Zebra.
Oh, ZTS. So wait,
yeah,
gotcha.
Kiss goodbye pattern there, guys. That's technically ugly, but on a very, very good run here. You've got to wait for price to tell you what to do. Trust what you see. Green candles are very strong as you're coming into some very dangerous levels there, but the strength is there in the short term. Cisco, one more here.
I'm throwing this one in there for you, Tim. This one's interesting on the watch list this week. This is ZTS, maybe think of it. ZTL Express. This is a Chinese shipping company. It's got pretty strong relative strength as far as the market goes out there. So that one's, I think, interesting, relatively low price.
Why does it say Cayman in parentheses? Now,
Cayman, because finally they've become pure capitalists there in Hong Kong, right?
I get you. I got you. And we probably missed a couple here. I'll get one last take from everybody here. One more, and if we missed any, we can get them tomorrow. CMG. God, Chipotle just feels like a very dangerous stock right now, Mark. I mean, that's a good looking potential green candle with some upside clear.
Well, it's closing at 666 right now, so I would stay clear of Chipotle. Don't eat a burrito today, for sure. Not today.
You literally just got the sign right there to go short. 666 on the penny.
Oh my gosh.
Woo. The burrito from hell.
But maybe that's a bullish sign, right? Because these Wall Street bankers have been 666 forever, and they know how to send the stuff artificially up. So interpret the sign as you will.
As you will.
That's right. That's right. All right. Back on the S&P real quick here. Well, let's round this show out here. Number one, guys, we're going to come back each and every day and get this thing up and running here on our halftime show. And we always have some fun doing it. If you've never been in our community before, give us a quick subscribe and the bell. Come back and join us every day. If you haven't clicked the thumbs up yet, I would appreciate it if you do that. It helps our analytics, tries to get us to grow the audience, and that helps everybody here. There's no question about it. Mark, we have a pretty standard offer of our pro service, which is $97 a month, but we offer it for free so people can try it out. How do people do that?
Email me, team at Tackle Trading, or go to the store tab at tackletrading.com, and you can click and subscribe there.
Doji, it would not surprise me if we finish on a doji here as we're heading into the end of the quarter. I'm not seeing anything in the chart that's telling me one way or the other today here, guys. I mean, expectations, Mark, for today. You think we're going to lighten up? You think there could be see some late day rally or selling?
I don't know. Once again, I'm not spending momentum has been the key to day trading right now. For the first time in a while, we don't have momentum. And so it might, that makes me pause on what I do. What I have done today is I've sold two naked puts on USO, and I've sold a naked put on US Steel. That's how I'm approaching the rest of the day. Maybe look at once again, I'm going to dollar shop. I'm going dollar shopping. So
Yeah. Yeah, I'm with you. I'm with you.
But
All right, guys.
convince me on CNK. Pull up CNK real quick.
Okay. Let's take a look at it.
All right. All right.
What am I supposed to convince you of? To go to the theater?
No, because I want to own some CNK at some point, but I obviously think it's going to go lower. How should I play that? Just be patient. Because I'm
Buy a
not
bear
buying it.
put debit spread and then take assignment on the lower put.
No, it's too creative. That's very smart, actually.
That's actually very, very smart.
That's really dang smart. Make a little money on the long put. As soon as you make enough to justify it, you pull off the long put and then you take on the assignment. Mark, you could sell the 2.5 strike for May right now and pick up $45.
I know. So what's my cost basis? $2?
So your cost base would be $2, 205. So then you're,
Because thank you, Noah. That gives me something to think about in the next 30 minutes.
yeah.
There you go.
Or you could just simplify it and just sell the 2.5 and say, if I have to buy Cinemark at 2, I will.
I mean, think about the ROI on that. My cost basis, at risk of ruin, right? I mean, Cinemark might go out of business.
Mhm.
I'm going to think through Noah's idea.
Mhm.
I like that, actually.
Yep.
That's the
All right,
kind of
guys.
quality stuff you get at Tackle Trading. Come be part of our community. We have a good time.
I love it. All right, we're out, guys. Time for me to grab some lunch, not a burrito. Gonna go get me a ham sandwich. All right, guys, we'll see you tomorrow. All right, good work, boys. We got a
I
meeting
get
here in a
cost
few
basis
minutes.
of $2 and I get a
$2.
return on investment on Cinemark. I mean, and I'm not talking about a valuation. How does that just not feel like a good bet?
It does feel like a good bet. It does.
It's not a bad idea. Is Maddie okay?
He's been sick, stomach flu, in bed.
Like
Yeah.
stomach flu, but not like coronavirus flu.
No.
Who do we have on Coach's show tonight? I guess we can. Yeah, we'll talk about this. in a few
Gino
minutes.
and Keith are supposed to be there. I'm gonna get some lunch, guys. I'll meet you
All
in
right.
there.
Okay. All right.
Thanks a lot.
Bye.